Well, you'd have to hope so after, what, 2 years now
Right.
we've been at it? But, investors went from, believing that we were at the beginning of the end to now realizing we're really just at the end of the beginning, right? So we're back to square one. They're not agreeing. They're giving conflicting statements. So uncertainty is still there, right? But at least temperament was a bit better. They're talking. They're trying to line up a date to sign some form of deal. I think most investors don't believe there'll be a phase 2 or phase 3 deal. Phase 1 is all you're going to get. But at least at this point, they seem to be content with that. And just like their attitude towards the earnings season and towards the export numbers we just got from China, people walked into September and October with a negative sentiment, and they were looking for confirmation bias out of this earnings season, out of these economic data, and they didn't get that. They got some good numbers, not as bad as expected. So I think right now we're just cheering not as bad as feared instead of better than expected. So, and that's reflected in the way they play the markets. They're buying value, they're buying large caps, they're buying leverage because interest rates are going down, but they've given up their bets on growth, they've given up their bets on momentum, they've given up their bets on the IT sector. So there's definitely a change in mood underneath, and they're cautiously optimistic. They're not, confidently bullish.
Right. Well, markets appear to be seemingly taking all of this in its stride, really, and we continue to see record day after day, particularly in the last week or so on Wall Street. So what is fueling this continued optimism in equities then? You touched on some of those points, but do you see this continuing as we move into 2020?
So I think, it's a good point. The equity market has been in denial, so to speak, right? They've kept going up, volatility's come down, returns have gone up, so it seemed that all was fine. But if you look underneath, like I said, some of the factors, dislocation that we saw in September are starting to happen again, and factor risk is once again something that investors need to worry about. The earnings season is almost over. We've got maybe another week or so left, and then after that, CEOs keep quiet for 3 months, and it's just geopolitics again on the front page. So there's volatility from there. There's higher correlation from there. So there is enough to worry around. But you're getting conflicting data. Some economic data are good, some are bad. So if you ignore what's going on in the manufacturing sector, for example, you're fine because the consumers are still spending money, right? So everything that's retail driven is doing well. The U.S. economy, the Japanese economy are really boosted by consumer. So those are still doing fine. But other pockets of volatility, like in the oil markets or the pound, for example, is now the most volatile currency in the G7. All of these things are starting to flare up.
Hey everybody, it's Hadley Gamble from our new CNBC Middle East Bureau in Abu Dhabi. Thanks for stopping by. Now to watch more, you can try one of the videos that just popped up on your screen. And don't forget to subscribe.